Okay, let me get this done and over with, because yes, I will admit it, I was wrong. Chelsea, they lost yesterday to a 10-man PSG squad, and quite frankly, outperformed Chelsea in every aspect of the game. In other words, the better team won. And as my friends know and can vouch, my real concern was David Luiz scoring on Chelsea, and when he did that, I knew we were in for a very long, unfortunate evening. Oh well. I will say this, I'm Chelsea till I die. I'm still wearing the Jose Mourinho-inspired tie, as you can see, and at least we appear to have 2 trophies coming our way this season. Although that third one would be awesome. Gotta wait till next season, right? And with that off my chest, let's get it started. It's after 4 o'clock. The markets, they're officially closed. It's about time to grab yourself a drink, and cheers, ladies and gentlemen. It's happy hour in New York City. U.S. stocks, they traded higher this Thursday afternoon after the U.S. dollar paused its recent rally and economic data came in mixed, giving investors some signals on a possible timing of an interest rate hike. Now first we begin on the economic front. Business inventories unchanged in January. Retail sales for February down 0.6%. Import prices for February up 0.4%, while weekly jobless claims, they were down more than expected, 289,000. That's below the previous week's read of 320,000. In addition, the Fed said that household net worth rose by $1.5 trillion in the fourth quarter of 2014 to a record $83 trillion, with gains driven by real estate. Just look around Brooklyn, and that's very, very obvious. Meanwhile, the headlines, they were dominated by the U.S. dollar cooling off after falling about 1% from its significant gains over the last few days, and also making headlines today of note, Deutsche Bank and Santander. This after they failed the Federal Reserve stress test, with the Fed now objecting to the capital distribution plans proposed by their U.S. units. In other words, these banks will now be barred from issuing dividends or buybacks until a new plan is approved. And with a slide in oil prices today on the U.S. dollar, gold rising on risk aversion, and some big corporate news, about 3 shares advanced for every decliner over at the New York Stock Exchange. Let's now take a look to see how the market settled in to close out this trading session. And on the corporate front, Intel falling on the firm's lowering of its first quarter revenue outlook, noting weaker demand for business desktop PCs and that inventories are lower than expected. Shake Shack, meanwhile, which recently went public by the way, reporting a fourth quarter loss and same restaurant sales growth that would slow this year. Lumber liquidators, meanwhile, surging more than 10% after the company defended its products in a conference call today, and Alibaba making some headlines after announcing that it will invest $200 million in Snapchat as the mobile messaging company engages in another funding round. So there you have it. Kick back, relax. Yes, I'm sad, but I'm still feeling good because I'm positive. You got to think about the glass being half full, not half empty. And I'll see you guys all tomorrow when it's a Friday. That's why I'm really feeling good. For ModernWallStreet.com, I'm James Sweeney.